Hey guys, it's me, Tommy, back again with another video. This video is actually specifically targeted to talk about how to make money trading Forex. Before we start the video, you can always go ahead and follow me on Instagram, uh, like me on Facebook. My name is Tommy Mullings, and you can also go ahead and subscribe to the videos so you can watch them daily. But as we begin, how to make money in the Forex market. Basically, in a way, all you have to do is buy and sell currencies. And what you're looking for is a currency pair of your liking. Specifically, mine's is USD JPY and maybe USD CHF. But the goal is to find the price and then look for change in price and be on the right side. So, two functions you can do is buying and selling, and this is due to the fact that the market is actually bilateral in nature. Most people call it short selling, because you can actually sell low and sell high, but I don't really want to get into that because it is kind of confusing. But short or selling is a term for selling, and then long and buying is a short term. It's a term for buying. Sorry about that. Next, you can actually go ahead and think about Forex as a way that you can make a limited amounts of money because there are only two ways you actually get charged. Brokers usually charge you from the distance between the buy and sell price initially when you make the transaction, which is actually the bid and ask price. Um, Next, on top of that, based on the distance of the price, uh, that we initially had versus the distance it will go determines the price point that we make. And that's ultimately made from the position size that we do take. So if you don't really understand that, I'm actually going to go ahead and break it down in the rest of the video. Like I said, diving deeper into the bid and ask rates. These rates are basically created by the banks and the brokers, once again, to make commission from the retail trader as we go ahead and enter trades to the interbank. Um, Once again, the base currency is actually the bid price. So if you can see the pointer, let's see if I can get a pointer. Pointer options, I'll say laser pointer. You see this base currency right here? This is actually the bid price. So as for the quote currency, this is actually the ask price. And another way you can actually look at money and make money is basically through position sizing. So what is a pip in Forex and what's a lot? And then finally, what's a leverage? So a pip is basically a unit of measurement. Sorry about that. To express the change in value between two currencies. So you could usually measure this by using the fourth or second decimal point based on the currency pair. And I say this because the currency for the US dollar is completely different from the currency from the yen. So therefore, there is going to be different price points where you would determine what is a pip. As for a pipette, this is actually a fractional pip, which is a tenth of an actual pip, and it's actually the fifth and the third decimal point. Also, Forex is actually traded by position sizes. That's how people are actually making money in the markets. And some of the quick position sizes are a standard lot, a mini lot, a micro lot, and a nano lot. Most brokers don't really offer nano lots, but they definitely do offer mini lots, and mini lots are offered because of margin trading or position trading. So therefore, you'll be able to do the mini lot and you'll be just fine. And the last thing is leverage. Just breaking down leverage in a quick nutshell. Leverage is basically what the broker is comfortable with giving you. So the higher position size, the higher commission payout you'll have to pay to the broker. But the more opportunity for profit or loss. And I usually stay at a healthy risk tolerance because, I mean, you could hypothetically put a standard on $100 account, but you only have so little, wiggle room to actually make profit. So it's not really the wisest thing to do. Types of orders. So there are various types of orders in the market. For example, limits are the way that you can look for reversals in the market. Like for example, there's a sell limit, so you're looking for the highest high before it reverses, and the buy limit, which is the lowest low before it reverses. As for stops, it's a very conservative approach to the continuation of the trend. So therefore, that's like once it reverses and it's continuing in trend, that's where you would get in, probably at an area of structure. As for stop loss, this is basically where the price hits an unfavorable amount of loss. So therefore, if you're losing about $30 and you're like, oh, I only have a $100 account, you can actually stop at maybe $10. And then once the price hits that point, you're out the trade and you're done for the day. Trail stop is actually when you're in profit. So a lot of people don't know this, and I'm going to say this twice. You can actually get stopped out in profit and stopped out at your profit target. So trail stop and top profit are big components in my trading strategy, specifically because I trade off of momentum. So therefore, once the momentum hits, therefore I put my stop at previous structure. So therefore, if it hits the structure point, I'm out the trade. I break even, or I actually gain a little bit of profit, and then I look for a new position, maybe the opposite side, or just a completely different pair. As for top profit, this is basically your anticipated price target that you actually made initially when you started to trade. You can always adjust all of the limits and stops and profit zones when you're in the trade, but specifically, the goal for it is to give you the ability to automate some of the emotion in regards to trading. What to expect for the next Forex video. What I would like to go ahead and do is like basically give my honest review about the Forex market and then give some insight in regards to how you can make your demo accounts more linear to your real accounts. Because what I see is in demo accounts, they go ahead and give you $100,000 worth of leverage, but do you really need $100,000 worth of leverage to show whether or not you're profitable? No, you need to see how much you're willing to put in at first and see whether or not you're profitable doing it that certain way. So therefore, see you in the next video. Please like, share, and comment any suggestions and any things that you want me to cover in future videos. And thank you and have a great afternoon.